So far this year, it's February 8th. So I guess the next trading day is going to be the 9th, or excuse me, the 10th. And it's early in the year, but so far communication services is doing really well. And it's green across the board, right? We're still in the green, but not by much. We have the S&P is up by 2.45. So it's kind of a market that doesn't have a strong direction. It's just trying to figure itself out, or we are trying to figure out what is going to work this year. Materials are number 2, financials number 3, healthcare number 4. And the companies that are really working so far, communication services. So Fubo, this is an acquisition. This really, blew up. And small caps, I think there's going to be more acquisitions for the next 4 years. Okay. Trivago, travel. This makes sense. And this is a tiny cap. So this really worked. Now, these aren't going to move the market a whole lot, but Spotify is going to move the market. This is a $127 billion market cap. It's having a great year. This is a great stock. These are the stocks that you can't value based on free cash flow because they're growing really fast. And Spotify is certainly doing that. And they're growing their user base really fast. It's a stock that, I've evaluated over the years because I'm a Spotify customer and I love Spotify. I think it's the best service out there. Of course, Reddit, we all know who Reddit is. They're a big cap, 39 billion. In relation to this sector as a whole is 6.46 trillion. So Spotify, Reddit is doing really well. That's a pretty good size market cap. And then what's the next big market cap? Meta makes a big difference there. Go ahead, Scott.
Thanks. I didn't want to interrupt. Yeah. Well, when we get a chance, I wanted to show you a little bit of my portfolio because you mentioned materials, and I have this one stock in materials that it's been, no pun intended, it's been pretty much the most solid stock, and certainly lately.
Good.
So maybe after you're done with your intro, I can show you. I'd be curious about your thoughts.
Yeah, I'd love to look at it. And then just moving down the list, DoorDash. This is one where I made money on DoorDash. My only complaint is I should have stayed in the stock because it's continued to go up. It's up to $81 billion for a food delivery company. Go DoorDash. NetEase is a Chinese company. It's doing well. So this sector is outperforming all the other sectors. It's number 1. When we move to materials, this is a very small sector, $2 trillion compared to communication services at 6.5. And then if you look at technology, it's huge. It's like 20 trillion or so. So these guys, the best performing ones are around gold, and these miners. And I guess gold is rallying in price and it's really gone up. Looking at the bigger caps, Freeport, McMoran, I believe they are a gold miner among other mining things. Southern Copper, okay. I guess copper prices are up. So materials are on their way up, and trying to pick out some bigger companies. Corteva, Newmont. So those businesses are working, and these tend to pay dividends too. So that is interesting. Then the last sector I'll look at is financials. And financials is bigger. I think might be the second biggest sector, roughly around $12 trillion. We're seeing some big action there. Of course, you have some of these small companies that really move. But look at Robinhood. It's way up there, 50% rate of return for 2025, and it's becoming a bigger cap, $49 billion. And the next one that looks interesting, New Holdings. This company is down in Brazil, up 32%. Financial services did really well last year, and it looks like it's going to continue this year. And when we get to bigger caps, you have those. The major caps on this sector, they've done well. You got JP Morgan, 15% rise, Visa, 10%, Wells Fargo, 15%, Goldman Sachs, 14%, Citigroup up 16%. So it's been kind of a simple recipe for success in financial services. If you pick the big names, you're good for the 2025 year. And
we talked about UBS a little bit too. I mean, that was a special case. because they had that the shotgun wedding with Credit Suisse. But
Yeah,
yeah,
good point. When we look at materials, it's not quite the big guys are getting it done, because really of the top 9, only 2 are in the green, a lot of red. And then we look at communication services. That one is a little more green, but Google is in the red year to date. It's been interesting how hard they've sold off. That is one of the themes that I'm going to point out to in a minute. Disney's not in the green. Verizon's not in the green. I'm a little surprised because AT&T is, and then Comcast is in the red. But Spotify, see Spotify, Meta, Netflix, T-Mobile, those are doing very well. AT&T. And we come down here, a lot of green. So this has been a good sector. Now, one of the themes that I'm picking up on actually relates to this story on CNBC, which is the tech megacaps plan to spend more than $300 billion in 2025 as AI race intensifies. Now, the market's beginning to frown on excessive spend on AI, and the 3 companies that are kind of proving that theory, or substantiating that theory, is Microsoft reported they spent a lot more on CapEx. It was specific to AI in the data center. The stock sold off. Google Alphabet did the same thing. They have probably been the worst sold off of the 3 bigs that I'm going to talk about. So Google Alphabet's been sold off. They are betting big on AI. They rose their AI spend, CapEx spend, and the market did not like it. And then Amazon announced a couple business days ago, and they raised their CapEx by $30 billion. And it was specific to the data center around AI. Market didn't like it. So all 3 sold off. So these companies could be kind of in their own world thinking, well, we want to be the biggest, the best AI company, but at what overall enterprise cost, right? If Google Alphabet loses $500,000 in market cap, was it worth it? I don't know. um, if it turns out to be that things are being overbuilt and the capacity isn't going to be fully consumed for 10 years, then the answer is these guys overbuilt, they overinvested, and they will be punished. They will be punished even harder, because I'm just not seeing how at the consumer level, at the user level for enterprise or businesses using AI, I'm just not seeing a lot of use cases where people are using AI every day, most of the day. It's not like I use browsers as an example. I use my browser, Google Chrome, and before that it was whatever. I use that for hours each day, every day. You cannot take the browser technology away from me. I would collapse. It would be really hard. My iPhone or my smartphone, same thing. I need it. I have to have it. AI applications are nowhere near that particular level of usage, acceptance, adoption rate. We're not even close. So will we get there someday? Yeah, I think so. I'm very optimistic. I'm using a variety of AI apps, like I'm using DeepSeek, I'm using Gemini, I'm using Meta, and ChatGPT. And I use them both because I think they do provide some interesting information, but it's not perfect. And in fact, I had Meta AI create this schedule for me, and it came out really nice and pretty. The only problem is the numbers were really wrong. They were like way off. And I'm like, hold on, AI. It's nice that you got information ready for me, but the information is completely wrong. And I think we're going to have a lot of that type of adoption challenges, which is if I can't trust AI every single time, I'm probably just going to go back to search and just do it the way that I can depend on 100% of the time. And that's like an anomaly kind of example, because most of the time these AI apps give me good data, but on this occasion it was really, really wrong. And I'm like, wow, that was a poor showing on that occasion. So back to this theme, will the spend on AI persist? I just don't see how it can. Businesses could really destroy themselves if they overspend. If they burn all their cash on an idea that doesn't work, it's going to be really hard to come back from it. And we're not talking about small dollars. We're talking about big, big dollars. So that's one of the themes that is beginning to, take shape. One earnings season. Next earnings, if the three companies I mentioned announce and say, yeah, we spent a lot on CapEx, we still don't have really a clear, business to show you that, we're spending all this CapEx, but look at this revenue we're generating over here. They can't do that right now. And the market sells off the three bigs hard again in I guess at it would be Q1 earnings announced. I think behavior is going to change, and they're going to stop spending the billions of dollars. They're going to really take a step back and say, hey, we got to wait for this market to be ready for AI. It might take a year. It might take 5 years. I don't know that it's going to take 10 years. I think that's too long. I think it's going to take a year to 5 years for AI to really be present in our daily lives of doing analysis, doing our jobs, running our businesses, people getting educated, that kind of thing. We're in really early, and we're being promised so much, and investing has really followed the promises, and that's not, I think that's pretty risky. Go ahead, Scott.
Yeah, I wouldn't disagree with that there. In fact, depending where you are in the world, AI can be such a controversial topic. And for example, even the Google search results, let's say like the passive AI, so that right now might only be in the US or North America. So like here in Europe, you can use Google Gemini, but you have to specifically go to it. If you just type in Google searches, it's still the old-fashioned with no AI search.
Mm-hmm.
And for example, Meta, it'll just say, oh, nope, cannot use Meta, not available in your area yet. And even in Switzerland, which is not EU, because they also have their own laws and their own, let's say, hesitancy about it. I mean, so another thing that's kind of more philosophical maybe, but I had some colleagues visiting from the US, and we were discussing it. They're hardcore software developers, which I'm not. I'm kind of in between. And they were saying it's in a lot of ways kind of silly and premature to call what we have AI, right? And I'm sure you know this because you kind of work in the space, right? Is what we have is pattern recognition software. It's getting really, really good, but it's just pattern recognition software that turns things into tokens. So it basically says, okay, here's this block of text. I see this block of text in some form, and it turns it into like a code, basically, right?
Mm-hmm.
It compresses it into like some kind of smaller, more efficient code, almost like compression you could think of. Now, I would be of the opinion that we will get to something more like AI, and probably certainly within my lifetime, and I suspect within yours too, we will get to things that are pretty unequivocally intelligent, but we're definitely not there yet. And so what we have now is a lot of hype, and it's useful. It's useful tools, but it's surrounded by so much hype.
Yeah,
I guess that's my spiel.
So
I had one other question, but it's not related to this. It's about stock analysis, actually.
Okay. Yeah.
When we get back to it.
All right. So let's put that on pause for a sec, and then we'll look at Siemens Energy and talk about stock analysis. So the other second theme that I've, and this is less of a theme, more of a, a gauge on what's going on with the market, is like I watched The Compound. I think it's a good show and it's on YouTube, because they put like, these are real, fund managers. These are real ETF managers, and these guys are professionals. And this week's guest, he is really seeing that the market's overpriced, and he wants to have the flexibility of being in cash or bonds. And before that, I mean, you have other really good investors like Warren Buffett in a lot of cash. And then you have a string of really credible investors deeper into cash. And it's not completely a crazy idea, because when you look at the 5-year, this stocks are really run up, right? You got stocks up on the S&P, the big stocks, 68%. So at what point are they going to, have a bad year? They had a bad year in 22. So that's something that I'm seeing out there. Now, am I like, selling 100% of my stocks? No, but I would say that I'm, it's an opportunity as I manage my portfolio, it's an opportunity to really look at the stocks I'm holding and vote a stock or two off the portfolio. Like, hey, this is the weakest one, so take it out. And look at some of the positions that have done really well, where I think, okay, this one's frothy. It's probably beyond its true value. Don't sell all the shares. Just take a percentage off the top. Just take a percentage off the top. And I'm going to be doing that for the remainder of February until I think, okay, that's enough cash. I'd like to get back to about 10% cash. And when I say cash, it's earning. The other reason why cash is being more hoarded is you have a rate of return that's very acceptable. 4% on cash, 5% if you, even 6% on corporate bonds. So 4 to 6% for your cash, your capital to be ready to jump into stocks that have been depressed is not a bad situation. And you may find that it was a really good move if we go back to a year like 2022 where the S&P was down 25%. You see some stocks sold off 40, 50%. You're like, wow, I'm really glad that I have some dry powder. I'm really glad that I took some gains off the table. So those are the two things I would say are out there. I wanted to share them with you. Now let's get into the questions you have, and then we'll take the question first on stack analysis. And while you do that, I want to open up Siemens Energy. Go ahead now.
Oh yeah, sure. So it was just about the sectors. Actually, could you go back to the sectors for a minute? You have a chance, and it could be whatever materials.
It is.
Maybe look at one particular sector, whether it's materials or financials, whatever.
Mm-hmm.
And the question was, which country are they, or which countries are they looking in? Is this only countries that are based, or excuse me, companies that are based in the U.S.?
No, this is really dictated by if they're listed in the New York Stock Exchange, if they're listed in the U.S. But Alibaba's in here. You got international stocks in there if they're listed.
The reason why I ask is so I own some stocks that are not listed in the U.S., but they're quite large, and I noticed they were very conspicuously missing from this list. But that's why, if they have to be listed in the U.S.
Yeah.
Because, for example, the material stock that I was going to mention should be in this list. That probably would be like number 5 or 6. Maybe not. Looking at maybe, but let's say within the top 10. But I guess because it's not listed on the U.S., it's not there. But okay.
Yeah.
That explains.
Yeah, perfect. So let's take a look at Siemens Energy. So this is a German company. It's going to be in euros, and I think the euro and the U.S. dollar are close to 1-to-1.
It's closer than the franc. That's for sure. Yeah.
Yeah, I mean, pretty close. So I took my first family trip to Europe. Must have been 15 years ago. Yeah, about 14 years ago. And each euro was worth $1.35 in US dollars. Yeah. And so the airfare, everything was relating to that currency.
Yeah.
I went to Europe last summer and I'm like, I'm getting the same prices as I did like at that point 13 years prior. And I went to Europe in 2019. It wasn't this favorable, but it was better than when I went 13 years ago, 14 years ago. So that was interesting. So 1-to-1. All right. So Siemens Energy.
Yeah, I guess it would not be on the list because it's only traded outside the US.
Mm-hmm. So I think this is going to be probably over-the-counter stock if it should be offered that way.
Yeah, probably.
Siemens Energy AG operates as an energy technology company worldwide. It operates through gas services, grid technologies, transformation of industry, Siemens Gamesa segments. They provide gas and steam turbines, generators, heat pumps. All this is this stuff's not going away. This stuff's going to be around forever. All right, good. Has kind of a high PE. The stock is on fire. 1 year, 300% rate of return. 5 year, not so good. Looks like it just took off with all the other utility energy stocks. Incredible. And it's a $45 billion market cap in euro, but we just went over that. That's close to dollars. Forward P is really high at 69. So the company is growing, but one of the things that I'm just uncomfortable with is when you look at a stock appreciating at 300%, that's incredible. That's like breathtaking. Like, wow, that's incredible. And then you look at revenue growth of 10%. You're like, that's not incredible. That's good, but incredible is 100%. Incredible is 50% on a big business.
Something doesn't quite add up.
This is a big business, and growing 10% is very good, but it's nowhere near like 300% stock appreciation 1 year level. So there's a little bit of hype, a little bit of everybody wants to get into this no matter what mentality is my assumption here. So free cash flow is 1.375 billion. Gross margins are low. Profit margins 3%. Negative in other years. So you got this business that has profit margins of 3% that went up 300%. Oh man, what world did I wake up to this Saturday morning? This is like overly optimistic. So they got this, really high valuation. Let me take a peek at their balance sheet. I'm willing to bet they have some debt because this is kind of an old school company. No debt. Very good. Nicely done. When we look at, so I'm not going to have any price predictions from stock analysis, but with their cash flow, I mean, I would value the company. The most optimistic valuation I can give them would be like $30 billion in value. And it puts them, 45 billion. They're overpriced. They're overpriced by 30-40% based on free cash flows. And I don't know that they're going to be all that profitable because a very high PE of 69. A PE of 69 belongs to companies that are growing really fast. And one thing I would say is Siemens is selling into a market where the market itself is expanding. I think there is a lot of interest in making new utility companies, expanding the capacity of making power. So I would say that. So it is kind of the whole space is getting bigger. Okay. And these guys are one of the big players. Okay, I got it. That could explain why a stock should go up 50%, but how did it get to 300%? That's really, really incredible. So I would not invest in this company. I wouldn't invest in GE. My wife worked at GE, by the way. She owns the stock. And for a couple of years, it was like terrible stock. So terrible. I recommended don't sell it because, you're going to sell it and it's going to be pretty much, like an 80% loss at that point. And then it came back and it was very nice. So.
Yeah, I would say my takeaway is very similar to yours. I actually knew about this company a couple of years ago, but I didn't look at it till recently. And of course, I thought, well, yeah, I wish I had looked into this last year or the year before. So, but you know what I think? I do not short stocks really.
Mm-hmm.
I sometimes will short market like the whole indices, like through SQQQ or something.
Yeah.
Or medium term. I shorted one single stock of NVIDIA once, and I did make a couple bucks, but maybe just maybe this would be one to short. Just maybe. I don't know. Make your own decision, but
yeah, definitely.
Thinking about it.
I would say, speaking of shorting stocks versus not shorting stocks is I'm probably not going to short that many stocks going forward. I made some money on some stocks. I lost some money on other stocks. Right now, I'm shorting NVIDIA and I'm shorting Palantir. So and I'm shorting both I bought a put option and it expires in January 26. So where I'm going is I want 90, as it relates to stocks, I want 99% of my attention on finding the right companies, investing in them, and then tending to the garden. Like if there's a bad stock in the garden, take it out. It's just because they're too distracting, and shorts are too distracting. The news is too loud, and it's not a majority of my portfolio. Like I could lose 100% on that put on NVIDIA, which right now I'm in the green, and 100% of Palantir, which is close to that amount. I think I'm down 80% of that put value, and it's immaterial. It just doesn't matter because it was a $3,000 bet combined, 2,000 on Nvidia, 1,000 on Palantir. And that's $3,000. I made $158,000 in January. But how much mind share did those two short positions take? Too much. Like, you got to be wise. Don't get distracted, is what I'm telling myself. So I'm going to let those ride. I think it'll be my little, object in the corner. Right now, the market's teaching me the lesson with Palantir that, hey, you may have all your rationale that you think you have, but the market's going to do what the market's going to do. It's going to take Siemens Energy, and it's going to take it up 300%. And it has nothing to do with fundamentals. It's just everybody wants to be in a utility stock. It is a place to be. And it's a very crowded trade that people want to be in. Well, that's completely foreign to all my discipline and my philosophy on investing in good companies that have good valuations on cash, good valuations on earnings, good profits, good balance sheets. Stay there. Stay in your zone is what I'm telling myself. Don't get out of your lane. Don't leave the zone. If you're making money, keep making money, and stay out of short positions. That's some of the learning. We talked about learning earlier in this call. I scratched an itch that I wanted this year, which is stocks are overpriced. I think Nvidia especially is like, hey, maybe I'm partially right on Nvidia. I'm completely wrong on Palantir. Palantir has clearly taught me a lesson. But this one here, you know what? My thinking was accurate. That's when I started to really say this stock's overpriced and it hasn't really moved in 8 months. Where Palantir, I remember a very good friend of mine, not referring to you, he bought this thing like 3 years ago.
Yeah, that wasn't me.
Okay. And I'm like, whoa, Kurt, so why'd you buy Palantir? He's like, well, and Kurt's an awesome guy and he made money in a business that he sold. He's like, oh, I heard it through this guy who said it was awesome. And this like personal friend to personal friend. So I thought, I threw some money at it. And I'm like, and I'm talking to him like around this era. I'm like, okay, well, good luck with that. It's just, if this is a software company, there's a lot of companies that I could find that look better than this. And let it, whatever. So then he and I see each other regularly. Well, not regular, maybe once every 2 months. And the last time I saw him, the stock was like here. And it was around the end of the year. And he was telling me he was crying on my shoulder of how much his taxes were going to be. And I'm like, oh, poor guy. You're going to pay all that tax money because you made all that money. I got all that sympathy for you, buddy. And so he cashed out there and now it's up here. So this stock's just been incredible for the past year. Just, wow, breathtaking. That's incredible.
Yeah, it has. But you know what occurred to me today, and you know me, you know that I'm definitely a Palantir bull, but you made a case a while ago with Nvidia that it was going parabolic. And I remember you said you have never seen that end well. And as much as I don't like to say like a stock. I try not to use that language because no matter how much you like a stock, it doesn't care about you, right?
Correct.
But let's say as much as I do believe the company and the company's future, for the price for the moment is getting kind of out of hand.
And you're referring to Palantir.
I'm referring to Palantir. It's getting to that point. Now it may hold it for a while, but depending on market conditions and all that,
Oh,
but
parabolic, baby.
That is what a parabolic stock is starting to look like, right?
Let's just kind of pretend. Let's just pretend that there's an endless supply of money. Man, what's the mentality of somebody that says, I'm going to enter Palantir here after it's had this move, over November, December, January. So that's 3 months. Over a 3-month period, this stock moved 150%. and I'm buying. It's like, oh man, whew, not me, but I would love to have a cup of coffee with that person and they could explain to me how they think, what they do, how they've made money. Because I would really be interested in maybe learning something. Because that takes a lot of guts. Even the move from here from November to December, just a less than 2 month move, it's up 96%. For somebody to have the courage to drop, 10 grand or 100 grand, or even the big hitters, right? They put $1 million into this. Man, I would just love to have a cup of coffee. I've had a cup of coffee with you, and I know that you believed in the company, so big credit to you. I would study, when did you start covering Nvidia, Palantir? When did you feel like this company can do it? And kind of retrace your steps and try to find, where were the decision points and how could I do that again? And what was the situation, the criteria, and the information that I used to make this decision? I would try to really document that so you can do it again.
Yeah, for sure. And for me personally, I mean, certainly luck was part of it. I mean, luck in that I've known about the company a long time, as I told you when we were at Starbucks. And I've known that they were doing well for a long, long time through other people. Like, I don't know anyone working there or anything like that. But let's say that I do know through some friends or other sources that okay, this company's doing really, really well. And then there was just some other, I don't know, do I want to say influencers? Some other sources that I found that kind of were pointing out like I said, beyond the balance sheet income statement, the growth sectors that were really exciting, right?
Mm-hmm.
And beyond that, I guess it was just the luck that I got into it just at the right time. So you were showing the beginning of that meteoric rise.
Mm-hmm.
I got into it just before that. So let's say I started buying in like August, September.
Actually, 24.
I did do a swing trade in July, and so at least I got a little bit. But like, of course, if I had just
nicely done.
Right. But yeah, so I mean, it's still not that big a percentage of my portfolio, but I want to say it's only like 3%, and I didn't get like 300% or even. Did I get 200% gain? No, I think I'm sitting at 160%.
Good for you. That's awesome.
It's still pretty good considering it's like 8 months. But I am not buying or selling. I decided that I'm just gonna write it out, and if I want to raise cash, I'll be selling other stuff.
So the stock that's making me nervous is, so I'm in Robinhood, and I started buying into Robinhood into 23, kind of into 24, and man, this thing's worked. It's number one from a return perspective in my portfolio. It was a $20,000 investment and it's at $90,000 of value now. So good job, Robinhood. So what do? I still have the stock. I still have the stock priced with an 8% discount. My target price is still a little higher. And my free cash forecast, I haven't changed this a whole lot in the last 2 years. So I got this one right. And the market's really liked it. But every time I look at it, I haven't sold any shares, but I'm like, man, when do I when do I sell a little bit?
Yeah.
Now I don't want this to turn into the next Amazon where I really regretted it, or DoorDash. I figured out DoorDash, and I walked away with a really nice gain, like 50%. And you see the rise here from the low to the high, 354%. So I bought at the right time. I think I sold here. Okay. So buying at the right time, and then I sold here. I dollar cost average, so it wasn't 190. It was more like 50% rate of return. And it was roughly on average, like less than a year, like 9 months, because I bought some shares here, and so forth. So I sold it, and then I felt like a genius, right? It went down 25%. And then now I feel like a dummy because it went up 86%. I'm like, wow, go DoorDash. Now, I'm glad I found it. I'm glad I invested it. And I'm glad it taught me the lesson that, yeah, don't outsmart yourself. If you found a good company and they haven't done anything to hurt their business, they actually have done a lot of things to improve their business. don't talk yourself out of the company you fell in love with here or here. If they keep making the business better, stronger, faster, more competitive, more profitable, maybe you got to stay on that horse and keep riding it. And that's why I'm not touching Robinhood. I'm not touching Meta. And if I could just find 6 more Robinhoods and Metas and DoorDashes, I'll be set.
Yeah, but I mean, we all make these mistakes then. Now I feel slightly better because I made this mistake with Robinhood. I sold out. I'm looking at it now because I was doing my taxes earlier, right? I sold out like 32 and a half. And that was a pretty good chunk of change I had in them. And yeah, I did make money, but would have made a lot more if I had just held it out.
And, again, I like to say that sometimes I pay a very hefty price, a very high tuition fee for the lessons that the stock market teaches me. And DoorDash, I paid a hefty tuition fee. Amazon, hefty. So, and Palantir, $1,000. That's a pretty good price on a lesson. So this one, I'm sticking to. I'm glad we're having this conversation because it hopefully just locks into my mind. Don't think too much about Robinhood. Just let it take the elevator up. If it comes down a bit, don't worry about it. You're already so far ahead. Just let it keep compounding.
Yeah, and but on the other side of the coin, I don't know how much you worry about taxes for like capital gains.
Uh-huh.
So my situation here, I don't really pay them. I mean, I might pay small amounts from my U.S. taxes, but that would just be minimal. It'd be like the lowest rates. It is a little more complicated here. Basically, we can have this conversation offline if you want, but basically, if they consider you a professional trader and not just a retail trader, then they just basically add it to your income.
Right.
It's either all or nothing. There's no like reduced capital gains. So it's either no taxes or income taxes. But so the jury's out, and they get to make that decision. You don't make it. So if they make that decision for me, then I'm going to have to probably pay more taxes. But generally speaking, in my situation, I could just sell the stock and pay very minimal to no capital gains.